Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Thursday, September 11, 2014. Just want to take a moment on September 11th to recognize the victims and the families of that terrible day 13 years ago. When you're in this business as long as I've been, it's hard not to know of someone affected by that terrible day 13 years ago. So with that being said, let's move on. Anyway, so we've got the SPY chart up, and this is the daily chart. And tonight we'll take a little bit of a different tact. I want to just point out a couple of things going on here. So right now, what you have here is a bullish market. There's no two ways about it. There's no doubt about it. You look at a weekly chart, okay, it's bullish. Okay, you look at a monthly chart, all right, it's parabolic. Okay, that means it can go higher. You see this spacing here? Okay, as long as this remains wide, the market can go higher. Okay, let's go back to the daily chart. Now, what happened when we took a little dip several days ago? What I want to do is I want to draw in for you a Fibonacci retracement. Okay, so let's go from low to high and look at where we are. Okay, here 197.37, 197.38 roughly, is the 382 retracement. So you came into this pivot high here, okay, and which turns out to be this 20 moving average and about a 2.5 retracement, which is another Fibonacci level. It's not on this particular diagram here, but it's a retracement. So 2.5 retracement, 20 moving average, pivot high. Market was defended by the bulls, and we're still in an uptrend. So, you know, I've been telling you that next week is options expiration, and it's the Alibaba IPO. Now, it's not even a normal options expiration. It's a quarterly options expiration. September is the end of the quarter. Therefore, you have everything expiring and all the index rebalancing going on next week. And you probably have seen some of that going on this week. With the moves down in the morning and up in the afternoon, chances are there's been some rebalancing going on this week in the mornings, and then the market floats back up on light volume. But any way you look at it, from high to low, morning to midday is distribution. And then when it floats back up, they're just positioning it for the next day's distribution. So look for more of that next week. Look for a lot of whipsaw action next week. And you can also look for the possibility that once the market gets above 2,000 on the S&P, okay? Now, the SPDR is a little bit different. You know, the SPDR today closed at 200.30, so we're already above the 200 mark. But when you look at the SPY, okay, anything we get above, right now we're at 1997 and change, okay? Once we get above 2,000, let's say 2002, 2003, you're going to have stop orders for people that are short the index or institutions that are short the index. You're going to have those triggered, and it's going to drive the S&P up another 10 or 15 points, maybe even 20. So next week, if they drive the market over 2,000, you're probably going to see a bit of a vacuum up another, you know, let's say 1% from that point forward. So just to let you know kind of what's going on, and it's almost not for real because it's the institutions playing games. It's options expiration. They take stocks in opposite directions that they were just going for the past few weeks, and so you just have to be a little bit weary. It's a tough week to trade stocks, but nevertheless, following that, we may get freed up along with the fall equinox. Okay, or on the 22nd at night, I believe it's around 9 something, between 9 and 10 o'clock is the fall equinox on the 22nd, which is Monday. So following that event, you would normally see a market turn. So if the market is up into options expiration, up into the Alibaba IPO, you come over to Monday of the following week, which is the 22nd, and maybe the market's up, maybe it's not, but that should be another turn period in the market. So it's something to be watching for. So I wouldn't be surprised to see some upside leading into after next week. All right, let's flip over to some other stuff. Let's look at the gold market. Gold market's still weak. Now, what was interesting today is, it's very weak, by the way, but what was interesting today is here's the GLD chart. Okay, and the price of gold at the end of the day did rebound a little bit off the lows, and the gold contract right now, December gold, is up almost $2 at $12.40, and basically, if you look at the GDX chart, which is the gold miners, it actually finished positive on the day, and what happened was it made a low, and then it reversed and finished positive on the day. And if you remember our weekly inverse head and shoulders, I just want to mention this because it's interesting. It's not at that level yet. It's going to have to come up short of another $1, maybe another 80 cents, and I'll have the exact number tomorrow night. If we close the week above that level, if we have a strong day in the GDX tomorrow, that inverse head and shoulders is on, and it up to a target of, could be up to this level here. I kept telling you 37, 38, certainly, at least 34, 35. And if that happens, if we close above there tomorrow, we can hop on that trade, but we have to see it close above that. But it was just interesting how we saw a divergence today between the gold miners and the price of gold. Here's the price of gold. Just couldn't finish positive today. But nevertheless, that's the weekly chart. By the way, so the weekly chart, we pierced this double bottom here, okay, and we'll see if this gets defended, we should see a bounce in gold tomorrow. Now, how much of a bounce, we'll have to see. It's going to play out over the next several days. There's really no way to tell at this point because the gold chart really broke down. When you look at a weekly chart, okay, and I'll just take another line in here for you and show you that once this happened, okay, this upsloping trend line, this was a good line. I don't know if I showed you this or not. I don't remember, but this is certainly a line that technicians look at, an upsloping trend line, because just like we say, sometimes we have lower highs, high, lower high, lower high, lower high. The same thing works in reverse, which is low, higher low. And if we shot up off here on another higher low, okay, this would have been a really good level, and it probably would have catapulted gold or GLD up, fairly, at least up to this 133.5 level here. But that didn't happen. We broke down, and now we're headed towards this double bottom here, and we should see a bounce there. But we may not see one before that happens if this level's not defended here. So that's where we are in gold, and let's move on. Moving over to oil. Another reversal today. Now, last night I know I talked about reversals, okay, and the reversals can happen over the next several days, but I kind of saw this unfolding, and we'll see if it continues over the next several days. But oil is very interesting because here's the deal, okay? This is in the blog post tonight. Now, I told you for weeks that oil was going to pierce 34, all right? And what happened today? We pierced 34. We came down to 33.91, okay? 33.91 on the low, and then we reversed up and finished up on the day, okay, 90 cents off the low. All right, now I didn't issue a trade to the members only because this could be a 1 or 2 or 3 or 4 day bounce, but I don't think it's anything more than that. I don't think there's going to be a lot of strength in the oil bounce. I could be wrong, and we can go up and test this 200 or 50 period moving average. That's certainly possible, but it was a higher risk trade, and that's why I didn't put it out to the members. But nevertheless, I have a better level for the members that I'm waiting for if this fails, which I think it will. So we'll see over the next couple of days if this pattern fails or it doesn't form a pattern and we come back down. I have a better level to play oil. But I just wanted to point out that no matter what the media is talking about, no matter what the reason they said today was the reversal, or whatever the reason for the reversal that they pinned it on today, it doesn't matter. I told you it was going to pierce 34 and reverse weeks ago. I talked about it virtually every night, or at least 3 nights a week. I talked about this level with you. So it's not about the news. It's not about the reasons why. It's just about the levels that come on the charts. That's common sense market analysis. It's not easy, but it is that simple. Once you understand that it does work and you learn how to do it, it basically pays you for life. Okay, so what else do we want to look at tonight? I think that might be about it. Yeah, that's about it. Let's give it a wrap. I'm David Frost, mystrategicforecast.com. This was another episode of Common Sense Market Analysis. Thanks for tuning in, folks.